Are we in a bubble? Investors in cryptocurrency, myself included, have enjoyed steady gains across the board over the last month or so. However, is it sustainable? Are we going to continue to see increases in price? In today's video, equities analyst Lyn Alden just 2 days ago answers the question if she thinks Bitcoin and Ethereum are overvalued or undervalued at today's prices. She then goes on to speak on why she expects major drawdowns and drops in prices for the equity markets, as well as some specific cryptocurrencies. Make sure to stick around to the end of the video where we will go over some of the most recent on-chain Bitcoin data to see if it backs up Lyn Alden's investment thesis. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing. It's free and you can always change your mind.
So we reached a pretty significant period of speculation back in the springtime, especially in some of the altcoins, right? So Bitcoin had, it did very well, but you saw, things like Dogecoin go vertical, right? So that's where a lot of the retail speculation was. And so ever since we had that big correction, I considered the space to be more reset, especially Bitcoin. And so, I think longer term, some of those alts will underperform when we have a deeper, longer bear market. I don't necessarily think that this current, bull cycle is over. I think we could see higher highs in assets like Bitcoin and Ethereum, maybe some of the others into year end or into the first half of 2022, for example. And obviously that's subject to all sorts of macro conditions, liquidity conditions. So that's not a guaranteed, but I consider the current Bitcoin price approximately fair. And, the way I arrive at that is just by looking at the long-term adoption curve of it, some of these long-term price models. I also compare its market capitalization to estimated gold market capitalization, right? Because it's kind of fulfilling a similar niche, not an identical niche, but a similar niche. And so we're seeing how much total addressable market this has compared to existing stores of value that are outside of the financial system. And so the benefit of Bitcoin really is that you basically are, you have the most energy behind it, meaning that it's the most secure blockchain in terms of, someone trying to change it. Ironically, these other versions of it, say Bitcoin Cash, you have to wait for more confirmations in order for your transaction to be considered, most likely final and unlikely to be reversed with a block reorganization, because it has a lot less energy in the system, a lot less, mining hash rate that's being directed at it. And so really Bitcoin's kind of approach is mostly deliberate in the sense that the reason it's slow and the reason it's expensive is because they wanted to keep block sizes small so that anyone with like a normal laptop can audit the money supply and validate their own transactions. Whereas if you increase the block size too much, you can increase throughput, you can increase the speed of the system, but then you make that harder to verify your own transactions. You have to rely on a distant server to tell you, whether or not the transaction went through, and it starts to approach more like fiat currency. And so Bitcoin makes kind of known trade-offs in order to optimize security over speed. Now there are other developments like Lightning Layer and things like that potentially offer faster payments when you're less inclined towards rock solid security and you're fine with a different security model for more speed. So there's kind of a trade-off there. We are starting to see use cases in places like, there's an article in The Guardian about Nigeria, for example. That's one of the highest places of adoption. They've had high inflation when governments were doing capital controls, and some of those, merchants were using Bitcoin to buy services and products internationally. We also saw, for example, when there were protests against the government, a lot of the protest groups had their bank accounts shut down, so they resorted to Bitcoin. And so it's kind of that freedom tool that a number of different groups around the world have kind of resorted to. Now, overall, the space, the problem is that anyone can create their own cryptocurrencies. So when we see bull markets, all these copycats start to come in, capital gets diffused among tons of different projects. And so that eventually kind of, depletes buyers and eventually causes kind of a blow off top. And eventually you have a longer correction and you sort out which cryptocurrencies are actually providing value and which ones are not. And so right now we have 10,000 cryptocurrencies. Most of them probably won't be much of value 5 years from now. A handful probably will be. So I think Bitcoin will be, Ethereum, good chance that it will still be valuable. But the smaller and more fringe you go, the less likely it is that cryptocurrency can be around in an attractive form. And so I think there is a lot of useful technology here. Like you pointed out, if you're sending an international wire, it can take a long time. It can be expensive. You can have hassles where just the bank says no, or just you lose track of where that money is in the system, and then you're worrying about which bank actually has this. Who do I call? Whereas blockchains can do international settlements depending on which one you're using. Maybe half an hour, maybe an hour, maybe quicker if you're using one of the faster, less secure ones. And so this is really interesting technology, both in terms of Bitcoin, in terms of stable coins, and some of the other things that the system provides. I think that because the markets are reliant on low interest rates and basically continued support, a lot of these valuations are unsustainable if the Fed tries to taper. The first initial round of tapering shouldn't theoretically affect things too much, but it can psychologically. But the further they get into it, when they actually start to withdraw liquidity, these valuations are pretty hard to support. We've also had that feedback loop where, like I mentioned before, the U.S. runs these structural trade deficits in order to support the petrodollar system. And what happens is, those entities get those dollars. They used to buy treasuries, but they don't really buy treasuries that much anymore. Instead, they go in and buy U.S. stocks, they buy U.S. real estate. And so we have this kind of loop coming in where our trade deficits go out in the world, all these dollars get out in the world, and then they come back and buy U.S. assets. And so actually our increasing percentage of our assets are owned by the foreign sector, and also is helping to prop up valuations. And so if that flywheel starts to reverse, the U.S. equity markets are more expensive than most of our peers, even adjusted on a sector by sector basis. And so we can see some pretty significant downward pressure if international markets lose interest in our markets, for any number of reasons. And so I do think that this is going, I think volatility is going to increase in the years ahead, and that this, we've almost been straight up since March 2020, and I think that's going to be facing more turbulence, and you're going to have to be a lot more careful about the type of equity that you own. And so I think that there are still high quality equities trading at reasonable valuations out there. There's real value, there's real work being done. On the other hand, there are meme stocks, there are overvalued tech stocks, there are speculative cryptocurrencies, all sorts of things that are much higher valuation than they probably will be in the longer term. And so there is risk of permanent capital loss kind of spread out in pockets around the whole market.
So there's Lyn Alden saying Bitcoin and Ethereum are currently fairly valued, which I found kind of surprising. I expected her to be in line with other investors who think Bitcoin is undervalued, but it's an interesting perspective to hear. Interestingly, Lyn Alden was the only investor I saw that was actually telling investors to take profits when Bitcoin was at $64,000, so it pays to hear what she has to say. Now, turning to some on-chain data, out from on-chain analyst Will Clement, we are actually seeing Bitcoin being moved onto exchanges, which is why he's short-term bearish on the crypto market. This is a trend that we do not want to see continue, because more Bitcoin on exchanges puts a downward selling pressure on price. Hopefully we see this trend reverse, and it's likely the reason behind the small dip in the crypto market right now. Anyway guys, hope you enjoyed today's video and that provided you with some value. I'll see you all in the next video, and as always, have a great day.